10 different ways to get started with investing with just $1,000. That is the topic of today's video. We've got 10 ways for you to get started, so let's hop into it. Hey guys, it's Justine with the College Investor, investing and personal finance for millennials. So you've probably heard investing is the adult thing to do, but what is it really? Well, all it simply means is you are going to commit your money to these types of accounts with the hopes that your money will grow over time. And one of the best ways to grow your money is by doing it in various investing platforms and using different investing strategies. So let's get into number one. Number one are stocks, mutual funds, and ETFs, or exchange traded funds. Now, these are probably the most popular ways to invest your money because they are investing in equities. Why are people so interested and curious to invest in equities? Well, that's because the stock market historically has earned 7% over the last 60 years. Well, that 7% is just about enough to cover last year's inflation, but typically it covers much more than that. Keep in mind when you are investing in stocks, mutual funds, or ETFs that there is going to be a certain level of risk. In fact, investing in general, there's always going to be a level of risk no matter what you choose. But the important thing here with stocks, mutual funds, and ETFs is that you look for these three things. Number one, you'll want to diversify your portfolio. In other words, pick a variety of funds to invest in to spread out and minimize that risk. Number two, you'll want to pick something that has low fees or no fees to help you minimize the amount of money that would deter your investments from growing. And number three, you'll want to look for the lowest expense ratio possible. So there's a variety of investing platforms to get started with just $1,000, and that's why you'll want to check out M1 Finance. This is a platform I've been experimenting with for the past year, and it's super easy to get started. All you have to do is download their app, hop onto the platform, and go ahead and fund your account with $1,000. It's one of the easiest platforms to use out there. We will be sure to put our link in the description box below for you to sign up. Number two are bonds and treasury securities. When you are investing in bonds, you are basically investing in debt. And that's because the government or various corporations will issue bonds to help raise money for various projects. If you are buying a treasury security or a government bond, essentially you are lending money to the government for them to work on various projects like building bridges, building new schools, infrastructure, and they have promised to pay you back that money plus a little bit of interest. Now, because it's backed by the government, there is somewhat of a guarantee on your money, unless you are going with a corporate bond. In that case, there is a little bit of risk because that corporation very well may go bankrupt and you could lose some money there. Now, the things with bonds and treasury securities that you'll want to look out for is that typically the interest that you earn on bonds is a lot lower than what you would earn on stocks and mutual funds and index funds. Number three, invest with a robo-advisor. If you're confused about which bonds to select or which stocks to select, then a robo-advising platform very well could be the option for you. So a robo-advising platform will take your money and invest it automatically into different funds that best fits your risk tolerance and the strategy that you have for your investments. Now, the reason why these are so great is because they have a computer software that does those allocations for you. In other words, there's not a human being on the other side, a financial advisor who is investing into index funds or stocks or bonds on your behalf. Rather, it's a computer software, which means it minimizes the amount of overhead that that investment platform has, thus passing along those cost savings to you. The two robo-advising platforms that you'll want to check out are Wealthfront and Betterment. With Wealthfront, if you use our link signing up in the description box below, you can get your first $5,000 waived of any type of management fees when you sign up with the College Investor. Now, I've personally been experimenting with Betterment for the better part of 2 years now, and I have to say it is fantastic. It's so easy to be able to set up automatic monthly investing contributions into Betterment and then just let it ride. I started actually with $1,000 about 2-ish years ago, and I've now since grown that account to over $3,000 just by simply investing the money, letting it set and forget, and then just doing a simple $50 per month in contributions. And it's a really great way to get started with investing with very little money. Number 4 are stock options. Stock options are a little bit riskier than investing in actual stocks, because with stock options, these are actually contracts that allow you to buy and sell different stocks. So when you purchase stock calls, these are options where the stock price is expected to rise. Contrastly, if you were to purchase stock puts, that's where you would expect that stock price to fall. It can get a little bit complicated because you are basically working with these contracts on any future expected prices. Sometimes they can really work out in your favor, but you really have to be thorough in your research if you're wanting to work with stock options. If that's the case, then you'll want to check out TD Ameritrade that has the capabilities to do these different types of spreads with stock options. Number 5 is real estate, and I don't necessarily mean that you have to purchase a home and build up equity over time, although that is also a great investment. You can actually do this with very little money, $1,000, by using crowdfunded real estate investing. This simply means that you pool your money with other investors and invest in various properties. And as of recently, you don't need to be an accredited investor to do so. You can use platforms like Fundrise and Realty Mogul in order to get started with investing in real estate. I'm very curious to know, let us know in the comments, would you like to see a review on something like Fundrise or Realty Mogul? Leave us a comment below and let us know if that's something you'd like to see on the College Investor channel. Number 6 are precious metals. Now, there are people who are for investing in precious metals and those who are against it. Those who are for investing in precious metals like gold say that this is something that is tangible and that holds their value. However, those who are against investing in something like gold say that, well, they don't pay dividends and it's just a hunk of rock that's laying around. What do you do with it? However, over the past 30 years, the value of gold has risen more than 300%. So there is a little bit of merit to investing in something like precious metals. However, if you compare that to the Dow Jones, which has risen over 1,000%, almost 4 times as much, then you're probably going to see, okay, maybe investing in the stock market is slightly better. Okay, way better than investing in just precious metals alone. But if you want to diversify, which we are all for, there are a few ways that you can go ahead and purchase precious metals. 1, you can buy it as an ETF through your brokerage. 2, you could actually buy the physical gold coins from US Mint. And 3, you can buy gold through a precious metal brokerage like Vaulted or APMEX. Number 7 are commodities. Commodities, think things like oil, natural gas, soybeans, cattle, corn, wheat, all of the things that people are trading and growing and using as resources. You can actually invest in these commodities, and mainly that's through the form of ETFs or ETNs. Cryptocurrency like Bitcoin and Ethereum are also treated and traded as commodities, so you could also use your $1,000 to invest in these types of commodities. Number 8, lending money to others. Now, I don't mean just lending money to a friend and getting paid back. You can actually use legit platforms online to invest your money in the forms of small loans to other people and get paid back via interest. Now, this wouldn't be the first place that I would go when I'm getting started with investing, but once you have a solid portfolio built up, maybe this is a little piece of the pie that you cut out and start looking into. Take a look at Prosper or Lending Club and see if those platforms platforms are right for you to start lending money to others and getting paid back with interest. Number 9 are certificates of deposits, or CDs. CDs are considered a low risk investment because you're typically working and opening CDs with a bank. They're holding onto your money for a set period of time, in which case you do not have access to that money. You can't withdraw it. And then once that period of time is over, they'll pay you back plus interest on that CD. However, the interest rates are typically pretty low. They're pretty comparable to maybe what some bonds will earn in interest rates. Now, I've used CDs in the past. I still have one open with about $3,000 in it, and it was earning about 3% interest. Now, it was a good way for me to park some money in there that I knew I was going to use for a future date, but a very short-term future date. Think within like the next 1 to 3 years, I wanted to use that money, so I didn't want to have the risk of losing it. And because I didn't want to have that risk of losing it, I got paid out interest, but very little amount of interest. You can do this directly with a credit union or a bank and open up those accounts and pick your maturity dates. Sometimes the maturity date is only 30 days. Sometimes it's 12 to 24 months. The longer that you have your money in a CD, typically the better payout in interest will be. And number 10 are collectibles. Think about anything that you can really collect, such as comic books, coins, art, anything that's considered a collectible, and that value of that tangible item actually grows over time. One of the ways that I've invested in collectibles in the past is by investing in a piece of art with Masterworks. Now, you actually don't see any investment returns until that piece of art sells via Masterworks. But it's a really cool way, once you get your portfolio built up, to kind of dabble in these extra ways to invest your money. And I think collectibles is one of those things that could be really fun to say, yes, I own a piece of art and I made a little bit of money on it. Investing with $1,000 to get started can feel a little daunting, but hopefully this list of 10 ways to get started will help you see exactly which one sounds the most exciting, which one matches your level of risk, and which ones are really going to help you grow your investments over time. Don't forget to hit subscribe. Be sure to check out more at thecollegeinvestor.com, and we'll catch you in the next video.